So I'm extremely humbled today because when I walked through the door, they had told us that we were going to wait in a waiting area before we came through. And as we walked into this waiting area, did I not see the full array of speakers? And you've seen most of their titles and a long history of everything they've done. And I really was quite gobsmacked as I walked through the door. So I hope I didn't act like too much of a fool in front of everyone as I was introduced to them. But I am extremely humbled, and I thank you, Nisa, for inviting me to come and have this talk today. So, as mentioned, I'm from Deloitte and lead the Contract Risk and Compliance division. Most people say, well, what's that? And that's a very fair question to actually ask. Contract risk and compliance is really more about the extended enterprise and risk management in the extended enterprise. So I think a lot of you can agree with me that there's very few of us that can put our hands up and say, as an organization, I know everyone I'm contracting with, I know everybody that's a part of my extended enterprise, and I fully understand and appreciate the risks that are attached to that. One of the first questions that we ask when we walk into a client is we say, right, do you know where all your contracts are? And most of the people right at the top go, I'm sure someone in procurement, or I'm sure someone in legal, or there's got to be somebody that knows what's going on. And yet what we uncover over and over is that we don't really have a holistic view of who we're contracting with in our organizations. And that's what I'm going to unpack a little bit today. So we rely so much on contract-based relationships in our organization. So not just from a procurement perspective in terms of suppliers and vendors and contracting with them, but more broadly in the extended enterprise, even from joint ventures, even in terms of our contracts with our customers, with our clients. Everything is meant to be based on some little page, some little document, sometimes 80-page documents and so on, which is meant to define our relationship. Now, what we tend to find is lawyers are really great at drafting. So, and I am a lawyer, and I know that's not the best way to introduce yourself to people because 80% of the room doesn't like you when you introduce yourself in that way. But lawyers draft fantastic agreements. We'll cover every single thing that we need to cover, and it'll be the length of a thesis by the time you get to the end of it. So most of the time, legal's doing their job. When you get to procurement is doing exactly what they're, well, not always exactly what they're supposed to do, but they're doing what they're meant to be doing as defined in their role. When business wants to engage with a third party, they will go through the procurement process, they will follow those tick boxes and checklists, and then you're on the system and I can pay you. And when you're done doing your job for me, we'll send your invoice to procurement finance or finance and get them to pay you, and we're done. What we're really bad at doing is managing that world in between, the actual management of that contracting relationship. Because it's very easy to get you on the system and to appoint you, even if it's through an RFP process. But then who's actually managing that you're doing what you said you're doing? Who's monitoring the service levels? Who's checking that you committed to a certain rate in the contract? Am I being invoiced at that rate? Now, when we originally started this within Deloitte, we got a whole bunch of global leaders to come and train us, as they usually do. And the one man stood up, he was from the UK, and he said, well, we found that at least we can create a return on investment of at least 3 to 7% of third-party spend within a company. And I sat there and I said, sorry, I'm a lawyer. I can't say things like that. Like, our clients are going to hold us to that, 3 to 7% of my third-party spend. And I think within your organizations, when you think about that number, these are very big numbers that we're talking about. So he said, no, I promise you, we are really bad at managing contracts. And then we started our engagements within South Africa. We started working with our clients. We started conducting these reviews and getting our own stats around that. Let me tell you, we are all really bad at contract management. That 3 to 7% in our last 10 projects actually shot up to about 15 to 20% of a cost savings return that you could see based on your third-party spend. And we'll get to a little bit of how that happens and why. So obviously what we're trying to say here is just because there's a contract in place, it doesn't mean everyone is going to do what they say they're going to do. And most of the time, that's the majority of the problem. So it's not the contract that's going to guarantee the success of the relationship. We still have to manage it correctly. Accountability becomes another question. So within our projects, what we first start with is, right, so do you have a contract management function? Whether it is in procurement, whether it is in risk, and you'll slowly find that within risk, this is starting to become a very hot topic because we have regulation in some industries that tell us how we need to work with third parties, even from, as our newly appointed regulators in the information regulator, and from a POPI perspective, the operator relationship, the third-party relationship becomes absolutely critical. So we've got increased regulation in this space. So it's starting to fit in the risk and compliance functions a lot more than it was just thrown into procurement many years ago. And most organizations don't necessarily have a fully fledged contract management function. It will be one of those additional roles that somebody's got to have. And accountability becomes a huge issue. You go to business, what do they say? Procurement's supposed to be doing this. This is, I'm sure, procurement's job. You go to procurement, they say, business has the relationships. Why are you talking to us? So then we're sitting in this little bit of a quandary. We're saying, right, so it really is about the world in between. And accountability becomes a huge issue because who's going to own this in the organization? And you'll find as we go along, there are multiple stakeholders involved in effectively actually managing contracts within the extended enterprise. So quite often you'll see there's an increase in outsourcing when we know that we're stuck in tough market conditions. So we'll say things like, this is not our core business. Let's outsource this because it's not part of our core business, and let's outsource finance, let's outsource IT, and let's focus on what our business is really built on. And there's nothing wrong with that. A lot of organizations are doing that. But in doing that and in outsourcing these huge areas that are covered, or these huge functions of our business, we expose ourselves to a lot of risk. So from data privacy risk, from people being able to access the personal information that's held within our organization, to cybersecurity risks. Most of the banks in the UK, they have, so we've also got a paper on outsourcing that the SARB has brought out. And the UK had this a couple of years before us. And what the UK equivalent is doing, the equivalent regulator, is they are fining the banks and they're penalizing them where they're not managing their third parties. And I'll give you an example. Quite often when we risk rank our third parties, what do we start with? We try and risk rank according to spend, okay? Which is everyone's natural knee-jerk reaction. So once we risk rank according to spend, probably your top 10 spend third parties will be your Deloittes, your KPMGs, all your big consulting houses, and so on. I'm not saying you can always trust us, but we're really more trustworthy than the others, okay? But essentially, those are the names you come up with. Now, are those really the guys that you're concerned about from a risk perspective? Now, in the UK, what happened was the banks had a threshold. So like our banks here, anything under 75,000 Rand won't go through the procurement process. So if you're a hacker, what are you going to do? You don't want to get onto the top 10 of the procurement list and the top 10 third parties that certain components are outsourced, so they come in under the radar. And once they're in, they get access to your systems, and they have something a lot more valuable than what you're paying them in cash. And it links into your data privacy debate as well. And so the regulator in the UK penalized a number of the banks. I think by the time all those fines were accumulated, it was almost £1 billion in fines that they had issued because organizations were not monitoring their third parties. And when they said look at risk, they said you've got to look at risk holistically. So when we talk about risk today, we're going to talk about strategic risk, legal risk, operational risk, and financial risk. You can't just look at the finances and say, I'm going to risk rank according to spend. You need to look much broader than that. So back to why it's actually relevant. Our market conditions. So first of all, everyone's a little bit cash-strapped lately. We're all hearing things like cost savings, cost optimization. I mean, the number of retrenchments that are going on in the country, it's quite a scary figure. So our organizations as a whole are feeling the effect of the market. And they're saying, right, we now need to look at where we're spending our money and how we're spending it, okay? So because of these market conditions, we'll either outsource certain things, those non-core business components, and say, okay, this is now your problem. I'm going to pay you 100 Rand a month. You've got to solve that for me. But we forget about the risk bit. Alternatively, we're not actually monitoring our spend with these third parties and doing third-party inspections on how we're invoicing. So let me give you an example. Through some of our projects, we've come across, for instance, labor broking agencies. Now, they will provide you with a number of staff that will help you through a particular project or maybe for a period of time. There's an agreed rate in the agreement. I'm going to pay you 100 Rand an hour. What happens is by the time we go through our entire analysis, and we've got a lot of data analysts that work on it, we get to, hold on, they didn't charge you 100 Rand an hour. They charged you 200 Rand an hour. Who signed off on these timesheets? And once you go into the timesheets and you see, contract manager stamped the front page. Front page looks great. Completely compliant with everything that it needs to be. Get to the third or fourth page and you see rates change and people working hours that the Basic Conditions of Employment Act will not even allow you to work. So we pick up a lot of different anomalies. And the problem is we've never checked. So, I mean, I think we quite often think, no, my organization's on top of it, but to what level of detail? So as we go into these, I mean, I think the minimum cost savings that we've identified, let's say looking at 5 contracts, has been around 50 million Rand because people are very bad at managing these contracts. So it's very interesting for me because I've always been in a compliance world, and compliance has always been, oh no, there comes the lawyers again with another law we need to comply with, and no one really wants to work with you because they grudgingly have to do what you're asking them to do. But this has been really interesting because there is significant value and return on investment that you can show when you start looking at these areas. And all of a sudden, you start having conversations with the heads of finance, the CFOs, the heads of risk, because this becomes a much, much broader risk, controls, and cost savings conversation. We spoke about reputational impacts. I think just by so many articles we've seen in the news over the last few weeks, I'm pretty sure we can count how many of them were based on poor contract management, insufficient contractual controls in place. It's a problem our country is experiencing. From a regulatory perspective, anti-bribery and corruption, data privacy, the anti-money laundering regulations, all of these have very, very specific links with third parties that even from a regulatory perspective, we are meant to be monitoring certain things. Specialist suppliers. So how often when we want to try and outsource the finance function, the IT function, or a security function, for instance, and we've got a specialist that's going to come and help us with that specific function, do we know how long that company is going to last? Do we know whether they'll be around tomorrow? Or do we know whether our systems will fail tomorrow? Are we asking these kinds of questions in a strategic way to actually know who we are dealing with and why? Overseas providers and technology, these are also kind of linked together. So often we're very quick to deploy in the cloud, and it's a quick agreement online, and off my data goes, off my organization's data goes, and so on? Are we unpacking the risks? Are we understanding that wherever all of this is being hosted, our organization is now bound by that regulatory regime in that country? Just Flo, and I know you're going to have quite a few data privacy speakers, but the reason this is becoming really important is, A, I need to know who I'm dealing with, where my information is actually going, as far as I can answer that question. As an example, in Europe, they changed their regulation, their fine, to 2.5% of annual global turnover if you are found to be non-compliant from a privacy perspective. So these are things that we need to be concerned about. Benefits and pain points. So I gave an example of identifying revenue leakage through contract inspections or supplier inspections. And it's always quite interesting because when you go and you engage with an organization, you'll sit down and it'll be a series of interviews and speaking to the stakeholders and understanding, what are your concerns in this space? Almost everybody has that gut feel about like a certain amount or a certain number of third parties that they deal with. They'll say, Deloitte, you can't trust them. Not Deloitte, don't work with Deloitte. And they'll have the name right there and they'll say to you, I'm concerned about this. But no one's ever actually had the time, the resources to actually go and conduct the inspection. Because these inspections, although we can carry them out quite quickly, they take a bit of time and effort to actually get to the nitty-gritties. Because quite often what you uncover is either maybe we just made a genuine mistake, or there was an error in the finance system and something we can fix, and there's a couple more controls we can put in place and we're good. Sometimes you uncover a little bit of fraudulent activity and you've got to pass it over to forensics. But yeah, it's not always the fraudulent issue. Quite often we just make mistakes because we're not watching what's going on around us. It helps us make better decisions because we can almost improve our accuracy in reporting and so on. So within our contracting world, we'll very rarely take all of our contracts, all of our risks, all of our obligations and unpack them and know exactly where our organization stands with these parties. And then similarly, take all the finance extracts and all the financial information that we can pull together and map it together. And what's interesting is you uncover various things like, why are we spending so much with a supplier? Why do they invoice us 5 times in one day? Why do we always pay them on 62 days and not 60 days? We're incurring penalties around that and so on. So there's a lot of different components that you can look at when you start matching the information together, which is what this is all about. Improving processes. So that example of the banks, the guidance note on outsourcing, and obviously with what we've seen in Europe, what it's pushed organizations towards is developing third-party risk and governance frameworks that really start managing that extended enterprise relationship in a much stronger way. We work with a lot of the listed companies here in South Africa, and you'll be surprised how we always try and tick pockets of boxes. Wherever you go, everyone's trying to do their own little pocket within their own pillar, but there's no one really pulling it all together into a centralized framework and into something where we can actually lay a strong foundation in managing our extended enterprise. Some industry pain points, and I'm not sure what industries everyone's in today from a government perspective. Anyone? Telcos? Banks? Maybe I should let you shout them out. Consumer business, manufacturing. Okay, all I know is that I saw hands up for the Institute of Internal Auditors earlier, so I'm going to go with that. Okay, so if you've got a particular question around an industry, you're welcome to also come and ask me during one of the breaks or, when we open up for questions just now. But you'll find each industry has very, very interesting themes that they go with when it comes to who we interact with. Obviously, from a government state-owned entity perspective, there are a lot of rules around procurement. There are a lot of rules that we need to follow around that. So the regulatory aspect comes in from that angle. Whereas if you go and you look at a consumer business and retailers, for instance, they are just more concerned about the financial benefits and the return on investment because it's a day-to-day business arrangement. So how do we get to the proof being in the pudding, as we saw on this previous slide? So it really is important to conduct the exercise where we can actually go and identify financial recovery. So what do I mean by that? Let me unpack it a little bit. So a lot of different companies talk about cost optimization, and you'll hear it becomes like the buzz phrase wherever you go. We all do cost optimization. And cost optimization is really going forward, how can I implement various controls? How can I design something within your organization where you can reap the benefits and optimize your costs going forward? So going forward, potentially I can incur 30% saving on where I am now. And what can I do in terms of my future strategy? So linking in to the foresight discussion as well. But cost savings and cost recoveries, that's looking at things historically. So that's me saying, let me come at a point in time into an organization and let's take a minute and look through the history of all these transactions, of all your interactions with this third party, and where we can pick up duplicate payments, where we can pick up incorrect rates supplied, where we can pick up inaccuracies in what's actually happened. So not just on service level delivery or any service levels that weren't applied and so on. Where can we actually find real money and put it back on the table for you? So what tends to happen with these is companies say, okay, well, I need you to go and recover this kind of money or identify the recoveries. And there's been very few contracts where you don't actually see it in because we're poor at managing contracts, and all of us are. And I will include Deloitte, I will include everybody in this because we're just all not looking at it. And we're only starting to unpack more about it now. As I said, ongoing cost savings through, we're calling it a culture of compliance, but compliance to contract risks. Ongoing spend reduction and so on. So there's a lot of opportunities to actually go in and save money, which is a nice discussion for us to have all of a sudden, because we're always getting the debate from our seniors saying, show me value for what you're doing. Tell me how what you're doing is going to show a return on investment. And this is one area where you actually can, because it's really, like I said, putting money back on the table. And some of the examples that I've got here as well, from a retailer perspective, I kid you not, it was 5 contracts. And across a range of different lists that they had, but to be able to recover, and I'm talking now, I'm not saying you can experience 50 million rands worth of savings going forward. I'm talking about inaccuracies in invoicing to that value. And that is something that can really be quite a game changer for an organization to say, hold on, let me start looking at my third parties. There's some organizations that have thousands of third parties that they actually deal with. And imagine if you actually did an exercise like this, what you could come across. State-owned entities, 5 million rand in charges identified where people just overcharged for what they were doing. And things were signed off. And in situations where, if I have a contract with you and my contract is worth 10 million rand for a 12-month period, and by March I've already doubled that, but no one picks it up in the organization, that becomes a problem. And we don't always notice these things. Engineering and manufacturing companies, I mean, that was the example with the labor brokers that I told you about earlier. Literally, third page in, people were putting in 90 hours a week of, apparently you can work 90 hours a week. I should let my team know this. But, no one really picked it up, because what tends to happen is businesses got a good relationship with a third party, so they don't check. And a lot is just built on relationships. So quite often we've been into a company, we say to them, well, how did you not notice that this was going on? And they say, but Bob and I go back 20 years. We've known each other all our lives. And relationships carry huge weight in this. So, what are some of our governance considerations that we need to take into account here? First of all, this doesn't fall or rest in one place. There are multiple stakeholders involved. You've got everyone from finance to legal to procurement to risk. Operational risk sometimes plays a huge role in this as well. So multiple stakeholders. It's not something that will ever rest in only one place. Understand the regulatory impact. So when you look at the regulatory universe of your organization, so in my world, what regulation applies to me? And you start unpacking the third-party references, and references where your third parties can either help you comply with regulation or that you need to enforce certain things with them because you also meant to look after what they're doing from a risk and controls perspective. Cost optimization. How can I look at this in a bigger way to start optimizing my costs and getting some cost savings? There's a very strong business case around this that could pay for an entire project around it, could at least justify the business case within an organization. And looking at integrated third-party risk as a focus. Don't just look at spend. Don't just focus on risk ranking them on spend. Look at all the other risk areas when I've understood my regulation, when I've understood my organization, what we're doing. And even if we pull it into the IP discussion around branding, if I've got an organization and my brand is important and I've got clients and customers or franchise stores or anything like that, how am I ensuring that even that is correlated? It's all based on a contract that you've got with them. You can check on it. Third-party failures. The biggest reason the banks started looking at this over the last few years was because of systemic risk. Because if their systems go down, the impact on our economy is so severe that it's going to cause huge problems. So they need to know who they're working with as third parties so that they are limiting any form of systemic risk to their systems as well. And business agility, we're moving forward. I mean, we've heard about how even from an internal audit perspective, we're thinking about the next generation, using technology, becoming more agile in business. We can't let our third parties fall by the wayside as well. They've got to keep up with us too. So I guess on that note, understanding who our third parties are, which most of us can't answer that perfectly well. We've had organizations that have said to us, oh, geez, I don't actually know how many telecom lines we've got. I usually have to go and ask Telkom. We don't know within the organization because sometimes we grow so big that we can't actually manage it. And you'll laugh and you'll stick it, you'll go, oh, what silly people that need to go to ask. You're surprised how many people in your organization do the same thing sometimes with different third parties. So I hope I've shed a little bit of light today on the importance of contract risk and compliance with contracts within organizations, and also opened your minds a little bit more to contract management as well and how we can start looking at things a little bit differently.